All right, all right. Good morning, good afternoon. Matt says Matt and S team knows everything. We make money. Cool. Don't chill it here. I think everyone makes money, whichever way they want to. Glad that you're making some money. Good, Ravish. I'm doing good. How has the week treated you? What a roller coaster week it was. So we're gonna get through all of that. Didn't trade, just reviewing and journaling. Yeah, journaling is very, very, very important. Um, can't you can't overemphasize the benefits of journaling. At least, especially in the days when you see markets really moving a lot. It's good to go ahead and journal saying, "Hey, what was I thinking on that day?" Right? It helps when if you're starting your investing journey, so that later you can go back and see, hey, like, was I too nervous? Did I want to sell? What exactly I did? And year later, we'll realize that, oh, come on, that bad day doesn't mean anything in the overall journey. So yeah, journaling is important, just to put down your thoughts on what are you thinking on that particular day. Keep yourself honest, can go back and check. All right, good that Matt is out. I don't like noisy people. What else? Any other new thing to share? We'll get going soon. How was your week? Did you sell any options? Yeah, I always sell options almost every day. And yeah, so far I was selling options, but I'll talk about in terms of what I did, let's say a little bit of I think I referred to last week also, saying that I will do little less hedges, increase my delta. So I rolled off some of my hedges once, and then Monday I took advantage of the whatever stuff happened in the market. So I took advantage of that, and I for after long, long, long time, I don't even know when I did that, like a calendar spreads, because August volatility was super, super high. So I sold a put spread on August and bought a call spread for September. So essentially, you don't have to pay much out of your pocket on some of the stocks that I had on my watch list. So when opportunity presents yourself, so Monday I did a lot of positive delta trades. Couple of tickers that I had on my watch list, and also a few that had kind of just sold off for no fault of theirs. So I took I did a few calendar collar spreads, or you can call diagonal collar spreads on those. What's my take on SMCI? My thesis on SMCI has not changed. Uh, it is still the same that, hey, at the end of the day, it's not a high margin business, because unlike NVIDIA, which has software, I mean, you can have an incremental the cost of incremental revenue probably almost nothing. Not in case of NVIDIA, but let's say in case of your software companies. That's not the case with the SMCI. You have to have engineers deployed, or to assemble the servers that AI hyperscalers need. And I still have the same opinion. I don't. I think I do have. I read yesterday. I read an article, so I'm gonna share on SMCI. I don't own it, but yeah, it fell on 20%. Where is it right now? But I never liked the valuation where it was trading, because it just got bid up because it's adjacent to AI. But come on, these two are different businesses, right? You can't treat every AI business as the same. It's a very different margin profile when it comes to SMCI.
Yeah, that's really felt like a rock. I think others in the similar space I'm looking is Micron Technology, which is kind of high bandwidth space also. So I appreciate your take on SMCI and Micron Technology, MU.
Yeah, MU, I don't have any info. Maybe when we have our stock request for the next week, I'll add MU.
Super. Thank you. Thank you, Vikas.
So what happened to SMCI? SMCI. Ooh, yeah, down 20% after earnings. Now it's at what, 470 to
500
480.
something.
From my perspective, I think even this is it's a very capital intensive business, right? So that's the issue. If you're creating an LLM model, if you have to sell an LLM model to a customer, your cost of delivery is almost zero. Right? Your marginal what do you call your incremental margins are super high, almost 100% operating margins for any incremental sale that you make. Right? But in case of SMCI, you can't say, that if you are building 12, 100 racks, or then you're building 101th rack, it's zero cost because you still have to solder, you'll have to solder all the chips. You still have to, put together all the racks. So it's a low margin business. MU, okay. MU, we'll talk about it. All right. So guess time to get started. So today, we'll spend some time on what happened. What's this whole new yen carry trade that caused such a big turmoil in the market, even though it was a very short-lived. I don't think it has completed. It has been completely done yet. But we'll talk about that. Give us some examples of what happens, and sometimes if you pay attention to the cause behind what's happening in the market, it could also be an opportunity. Also, we're going to review a lot of our earnings. So bunch of these, you see these logo images. I have these earnings we're going to review. We'll spend time in reviewing a few stocks that you gave me last week, and still the same game. I don't know what I'm going to get into. I've not looked at these stocks. I just pulled up the data, and we're going to look at together in terms of review these stocks for various criteria in terms of margin profile, growth, and all that. Yeah, I guess that's it. And if you have any other questions, anything else you want to talk about, I'll be here. Bring it up. All right. Let's before that, anyone joining for the first time? Anyone new? Oh, let me see. I see a new name, Harita.
Yes, hello. Good morning.
Hey, morning. How are you?
Doing well, thank you. I'm joining from San Jose.
Oh, cool. Very local. I am in San Jose. We might bump into each other in some supermarket. Who knows? But so what brings you here?
I just want to learn more about especially ISOs and startups and also general investing.
Okay. Yeah, so I don't do angel investing, so I don't discuss startups. But I'm more focused on public markets, and
Sounds good.
probably not a big fan of a private credit also. That's now blowing up. We can talk about the reasons later, but yeah, I focus more on public market.
I see. Okay.
Cool.
Yeah. Anything helps. I'm pretty much a newbie, so looking to learn.
Welcome.
Thank you.
Anyone else joining for the first time? I see the name James, but I've seen name James earlier also. So I think all of the names are familiar. Ravesh, it feels like everyone is from San Jose. All right, so let's get going for today's session. As always, anything that we discuss here is for education, little bit of entertainment, but not a financial or tax or any kind of a professional advice. With that disclaimer out, let's talk about what happened this week. So I hope all of you had a good Friday. Look at the chart. This is like S&P 500. All we see is a green green grass, a little bit of a brown one, but majority market was good on Friday. I guess maybe was it Thursday or was it Friday? I don't even remember, but some part of a time I saw like QQQ up 3%. That's like, wow, when did I last see remembering QQQ up 3%, right? So it was eventually, I mean, just Friday was a good day, but overall, if you look for a week, not that great a week. Not that a week matters a lot in decades of investing, but yeah, overall week was a little patchy. Some stocks did well, some stocks not so well. But yes, still, I'll be happy. This was based on what we had on Monday, right? So Monday was all sea of red, which is look at Microsoft down 4%, Apple down 4%, Nvidia almost 9%, Google, Amazon, Costco. There was not even a sector or very few stocks, mostly related to the consumer, your products like under XLP, consumer staples, probably were the ones because those are generally recession proof. And looks like on Monday, nothing could go right. Like market is crashing, world is crashing. We don't know, if we're gonna survive tomorrow or not. That's what happened. At least the stock market behaved in a way that's what gonna happen on happening on Monday. All sea of red, and this is just S&P 500, which is the top 500 market cap companies. Means if you go deeper in at a level below and start to see other companies which are not as big or as strong, you are in even worse position, right? These are the biggest of the biggest companies in US stock market, and they were bleeding on Monday. So what suddenly happened? You get up on Monday and then you see, oh gosh, what's happening to my stock? Best thing is don't even look at your market. But we are so inundated with information on our fingertips that even if we try, you just don't go. You can't get away from it. So we're gonna dig deeper. When I got up and I looked into my, what the heck has happened? Go to Bloomberg or whichever, go to Twitter, or now I think it's X, and you see, okay, what is the heck this happened, like yen carry trade, right? So we're going to talk about this. So this is the extent of the, impact of Monday. South Korea, they halted selling. Japan market Nikkei was down 12%. That was its single biggest drop in the history of Japanese market. Japanese market have had, they had like lost 4 decades. But even then, the 12% drop was the biggest ever drop. NASDAQ was almost 6% away from getting into bear market. That means it was down 14% from its recent high. But if you get down to 20% from your recent high, it is technically it is considered as you're in a bear market now. Warren Buffett sold 50% Apple stock in Bank of, almost $3.8 billion in Bank of America. Not just our traditional stocks, right? We had a Ethereum, or the crypto side was equally bad. Like Ethereum was down 25%. Imagine this is the second biggest crypto project in the crypto economy, and that's down like 25%, right? Bitcoin didn't have any better day. It like you are reliving through the whole experience of November when FTX had collapsed. It was down, I think Bitcoin was down to 49K, right? All the way from 62 plus or wherever it was. So, and the fear gauge, which is VIX, that has spiked to 65. Last I remember, VIX was higher than this was in during COVID, where it had spiked to 80. And after that, 30, 25s, and the recent times it has been like below 20. But suddenly VIX had spiked to 65. So not a pretty day. Monday was not a good day. And if you were on vacation or didn't have a chance to open up your brokerage platform,
Good for you.
good for you. Good for you on Monday.
I mean, Vivek, personally, I'm confused. But Apple was holding grace in this whole thing, and in spite of Warren Buffett liquidating Apple stock, almost 50% holding in Bank of America, what do you think is holding them? Was it the buybacks or hedge funds or what? Because it was one of the most positive stocks for the entire week.
So there are a few things around Apple, right? I think even last session, someone asked what is keeping Apple, positive, because from a revenue growth perspective, they didn't have much revenue growth, right? It's like 4 times they had a negative revenue growth. Now this quarter they had a positive revenue growth, but it is also like a single digits. But here's the thing, Apple is a big cash generator, right? It's like $100 billion of free cash flow.
Of course.
Number two, there is a new refresh cycle coming up for iPhones, and there is a lot of positivity in the market, thinking that if anyone can make use of AI, it's going to be Apple, because you got like 2 billion devices in people's pocket, and if you were to make AI useful for yourself, your AI needs to know about your data, right? And Apple on your iPhone, your whole life history is on your iPhone. So, and Apple has mentioned that whatever iOS 18, whichever is their new iOS, that's where you can actually make use of the new AI features, right? And I think there is a lot of positive sentiment around the refresh cycle. Gotta be probably better than what we have seen in previous cycles, because people, consumers would want to have access to those AI features. So that is what has been kind of a driving Apple stock. Number two is, compared to the other tech stocks, if you look at Apple, didn't have that run up so far, right? Apple didn't enjoy the whole AI run up that Nvidia, Google, they have enjoyed. So it's been kind of a pending for so long because Apple never revealed their AI strategy, right?
True.
It was every quarter, the question that analysts or investors have in mind for Apple was, what are you going to do on AI? And Tim Cook was like, basically he'll talk about it when he wants to talk about it. And it was only, I think, in the previous quarter where he said that they are now forced a relationship with OpenAI, and probably they're going, I think even also they're open to also looking to make enter into relationship with other AI providers also. But that's what they're told, that we're going to have this available in fall. I know there are some news/rumor, because nothing has been confirmed by Apple, that the release may be a bit delayed. Well, that's fine. If you have a phone, you'll in a new iOS upgrade, you will get access to those features. So that's what is driving the not driving up, because it's not that the Apple stock has been like performed.
It's holding up,
Like
right?
crazy.
200,
It's just holding up.
Yeah,
Right.
yeah.
It's like 16%, not too much. If
I
like
know.
it's just holding up.
I was reading somewhere, we have so much exposure to Magnificent Seven. They lost $1.3 billion of market cap, but year to date, they already built up 2.57 million
Yeah, trillion.
market cap anyway. Trillion, both are trillion. 1.3
Yeah, exactly.
0.57 they have built year to date also. So it's kind of difficult to ignore and just, I mean, most of the market is experiencing AI, and most of the returns are about Magnificent Seven. So kind of difficult to build a case of strong diversification and not participating Mag 7 going forward.
True. So that's what I think Apple is, and I don't think that Warren Buffett selling 50% of the Apple stock is a big concern, because hey, if any of my position becomes 60 to 70% of my portfolio, I will just lose my sleep. I mean, I won't even let it go that far. So it's a prudent, I would say, prudent step to reduce that exposure. It has become too big. Last quarter, when we got the 13F, Apple was 50%, and since then Apple has appreciated also. So even after selling the current stake, I think Apple is still maybe around 30 to 40% of Warren Buffett's portfolio. We'll probably know in the next 30 days. Anyway, so, but across, the Monday was like a kind of a black Monday. People started to relive, hey, is it like 1987? Where we had a black Monday somewhere in October, are the things so bad? VIX spiking to 65, right? 65.73. It was like from 15. It wasn't like a few weeks ago, it was like less than 15, right? And if you go back and look at the history of VIX, this was the third highest VIX reading in whatever, almost 20 years, right? This one was 2008, great financial crisis. This one, where it spiked around 80, was during COVID. And now this is the latest one, which is 65. Are the things so bad? Whatever is happening in the world or in the economy, that's what make you think, what is happening? Is the economy so bad? What are people just panicking for? And that's what I couldn't wrap my head around. What has broken suddenly? Is the situation, is the real economy is so bad as the VIX is projecting it to be, or as the market is reacting it to be? There has to be something which is temporary, right? So there was an article on in Bloomberg on this whole Japanese stock market meltdown that happened. It was an epic the market crash. If you have time, you can look for it. But the net from a 6.7 trillion, it lost like $1.1 trillion market cap value in just 3 days. It was an epic meltdown in Japanese market. That brings us to what the heck is happening in Japan that is causing the turmoil even in US market, right? So that's where the whole concept of Japanese yen carry trade started to come in. When you started to dig deeper and see what the heck has happened, all you see, written plastered around the whole financial media is yen carry trade. And I was like, what the heck is yen carry trade? So we're going to go through the yen carry trade, understand. And these are the cases where okay, now I know what's happening in the market. I don't think it's going to impact me or the stocks that I own or I want to own. So these are the time where you can take opportunities when those present themselves. And many stocks got killed for no fault of theirs. Let me read some comments first. Other James that I always hear is in Philippines right now, so must be a new James. Okay. The market horrible on Monday, Tuesday, Wednesday, open high, down. Recession fear over? No, so we will talk about it because everyone is talking about the SAM indicator. We also discussed SAM indicator a few weeks ago, then I think last Friday, wherein the SAM indicator was 0.53. And historically, if that indicator is 0.5 or above, it has been able to predict all the recessions of the past, right? And last Friday, it was like 0.53, and now everyone is talking about recession. But irony is this, I had heard the creator of SAM indicator, Claudia Sam, she came in on a couple of podcasts and she doesn't think that we are in recession. So while the rest of the financial pundits are all talking about we probably are in recession because SAM indicator is above 0.5, the creator of the SAM indicator, she herself says, it's not so soon. I don't think that my indicator is actually telling that we are in recession. It doesn't always 100%, right? But who cares? So that was funny. when I heard her on a podcast saying, okay, she herself doesn't believe that we may be in recession as much as the rest of the people who actually using indicator created by her believe that we are in recession. So anyway, Fred says 5:45 a.m. on Monday was the rock bottom price for the week. Sunday I was playing futures, volume was super high, crazy super high. What the heck are you doing on 5:45 a.m., man? Anyway, I don't even, I have no idea what's happening like 5:45. I don't get to open my, the terminal a little later. Steve James, I'm new to this joint group yesterday. Okay, so now we know we have a new James. Welcome, Steve. So looks like you joined yesterday. I mean, so what brings you here and what are you looking to get out of this meeting?
Can you hear me?
Yeah, loud and clear.
Okay. Okay, I haven't used this Zoom app on my phone for a while. So hi. I'm basic investor. I don't have a lot of stuff invested in the stock market. I kind of really got serious about it around 2019, and I've been dabbling. I got mostly just equity stuff, ETFs, some index funds, a little bit of tech stocks. And with all the crazy stuff that's been happening, I just thought it'd be nice to be in a group where we can actually start to discuss different things and be a little less susceptible to all the crazy.
Yeah, exactly.
Yeah, actually talk to some other people more interactively. So what I'm hoping is just to be able to be part of some discussions and kind of maybe expand my horizons a little bit. Ultimately, what I want to do is I'm not looking to be a professional investor, but I want to have a lot of skill and mastery around even as a retail investor. So I want to continue to expand and grow in that area.
Cool.
So that's it.
No, great to have you. And I think even myself, I'm just a retail investor. Yeah, I think you started the right way, which is with the ETFs and the index. And that's how I started my journey because I did not have time along with my job to even look at individual stocks. So, hey, if you don't have a time, you don't understand individual stocks, if you don't like going through the earnings, ETFs, index are the best way. So yeah. You started right.
I've taken a course on technical analysis and stuff, so I've started to get a little bit more down the path of trying to actually figure out how to have some skill around this, but I'm sure there's still a lot more for me to learn.
Cool. Yeah, I'm not a big user of charts, but I'm more on learning more on the business side. I just want to focus on the business of the company.
Yeah.
Cool. Good to have you. Friends, on Monday, a lot of my friends were not able to log in. Yeah, I also saw on Slack, I think some folks pinged, I think Kunal pinged that he's not able to log in, but I was able to log in into my Thinkorswim, Schwab, Fidelity. For me, it was all good. But I did see even on Twitter, a lot of folks complaining that they're not able to log into their brokerage accounts. And then you start to see those conspiracy theories saying, hey, retail investors not being allowed to log in and buy the stuff while the institutions have been buying it. And I think there is a Bloomberg article that came out, which says on Monday, a lot of retail investors sold because they got panicked and institutions bought because they know what's happening behind the scene and there's nothing much to worry about. So let's talk about what this whole yen carry trade is and how it unfolded. It caused a lot of panic, maybe temporary in the market, and educate ourselves so that if such situations arise again, we know what the impact is. And rather than being carried away by what's happening in the market, we know what's happening, what's the reason behind it. And then you can make a judicious call on what you want to do in your portfolio, right? So a little bit background. Japan had historically kept the interest rate low as compared to the rest of the world, right? So if you look at Japanese interest rates for last almost 10 years, they've been like negative 10 basis points. negative 0.10. They raised it to 0.1%, like right, 0.1% in 2020, end of 2023, late 2023. But still, US has got what? Fed as 525 to 550 basis points, right? So it is no brainer to borrow in Japanese yen because you're gonna pay 0.1% and then invest in US Treasury, you're gonna make 5%, right? And that trade has been like a staple of these hedge funds or the currency traders, and that trade is called, yen carry trade. The differential of the interest rate between the Japanese Bank of Japan rate and the rest of the currencies was, everyone was levered into this because you borrow Japanese yen, you pay almost nothing, buy the assets around the world, you go and invest it in NASDAQ stocks, you go and buy real estate, or you buy US treasuries, and it just works. It's like free money for almost no risk because this is 0% interest rate. And then you leverage it up because that's been the trade that has been working for decades. Everywhere else in the world, after COVID, the central banks have started to increase the interest rates. Japan did not. Until very last, where they increased it to 0.1%. Right? So that's been the carry trade that has been happening for a decade in a lot of hedge funds, maybe institutional funds as well, plus maybe individual traders. Who knows who all is involved, how big this carry trade could be. There are some estimates of trillions of dollars being flown through this yen carry trade, right? But here's a few things that I want you to focus on. When one buys in a currency A and then buy assets in currency B, that asset could be stocks, could be treasuries, could be bills, anything. These are the risks that we need to be aware of. Number one, if the interest rate on currency A goes up, right? This is the currency in which you borrowed it, right? And if Fed increase the interest rate, then you'll have to figure out, is there still borrowing at a higher interest rate is beneficial for you or not? So that is risk number one. Risk number two is the currency A, which is yen, it appreciates against the dollar. Right? Then you have to repay your loan in yen. And now you have used that yen to buy dollars, and now yen have increased in value against the dollar. So when you have to repay it, you will need more dollars. So say you borrowed, $1 million yen, and that is equivalent to, let's say, $750,000. Now yen has increased in value. Now if you have to repay, suddenly you need to have $800,000 to repay the same amount of yen that you borrowed. Right? So that is risk number two, which is a forex risk. Number three risk is you bought assets. Right? Now those assets go down, and if you use those assets as a collateral and for your leverage, then you'll gonna get a margin call against those collaterals. Right? That's a pretty standard one. So what's happened over past few weeks? Right? Each individual risk is big enough, but what happened in Japanese market recently? Bank of Japan raised interest rates by 25 bips, right? So that they did on July 31st. So they raised it by, they did not raise it by 25 bips, but they raised it to 225 bips. Not a big change in interest rate. If you really look at it, hey, it's only 0.25%. US, we have like 5.25%. But not only they said that they're gonna live with this 25 basis point, but they're also gonna increase it or raise it more if needed. So there's a huge shift. Imagine a country that has kept negative interest rates and 0.1 interest rate for a long time, now suddenly increasing it to 0.25. The relative change is huge. So that's happened on end of July. But two, USD has been losing value against yen. So that makes the risk number two. Yen is becoming more and more expensive. So if you have to repay your yen loan that you have because you had taken huge leverage, you need to arrange for more dollars now. So look at what happened between USD and Japanese yen. Said close to in July, 1 USD was equal to 161 yen. And then by the end of July, it is like appreciated almost 20%. When it comes to the Forex, like 20% up or down in the stock is fine. When it comes to the Forex, even 1% move is a huge, especially in the currencies that are pretty stable. We're not talking about, let's say, Venezuela Bolivar. Those are volatile. We're talking about some of the top 2 or 3 currencies in the world in terms of the trading volume. Right? Euro, pound sterling, dollar, yen, they don't move, so much. And if you have such a huge move, now all your equations and bets are off because now the currency in which you're borrowed suddenly has appreciated by 12%. You may not be even making 12% in the trade that you have put in by borrowing that currency. That's a huge risk. Third, Friday, and we talked about this in last week session, we had a bad employment data and market was thinking that we're going to get into recession. Last Friday, market sold off. And also everyone talking about SAM indicator that, it's eventually last week is a bad for the stock market. Right? So that means that if you had borrowed yen to invest in the US stock market, now you're getting even much less return from the US stock market. Right? Now, all these things happened all together, came all together and created this potent combination which blew up the market. In any individual risk is big enough. But now we had all these 3 risks materializing all together. And if you are leveraged up, it'll make you really, really difficult to survive because a small percentage change could wipe off your account. So there was a rush to close out these leverage loans. And how do you close out these loans is, hey, you need to repay it in yen. Then you sell your assets. And if you had borrowed, you had invested in US stock market or even wherever else, if you had some other illiquid investments, you will sell whatever you can to raise basically dollar, repay it back in yen before the situation deteriorates. So those who had taken it, had put on collateral, they got margin calls. They had to sell what they could, right? Not what they want to. What they could sell in the market, they had to sell it to close down all the leverage positions. So if you had nice gains on these Magnificent 7, you sold those Magnificent 7, and then everyone knows Magnificent 7 is such a safe trade. There will be other hedge funds who would have levered up on Magnificent 7, and when those went down, they also had to basically start to get the margin call. It's not the first time. We have seen it multiple times that, it's like a domino effect in this whole leveraged, the way Wall Street leverage on these instruments. One domino falls, it brings down the whole, have an impact on the whole industry. And that's what it was happening on Monday. That's essentially the yen carry trade is.
Vivek,
Yeah.
For an inexperienced trader like me, I should be experienced. My biggest mistake was after buying Microsoft in '06. '06? Yeah, I sold a bunch of shares to buy HP. No, because Kramer and Buffett, they say diversify. Well, hell, I didn't know what I was doing. So then I sold a third of it to buy Intel and HP, because HP, you're hungry because you're number two. Remember?
Yeah.
Well, that was a big mistake. Then they fired the CEO, and
So
boy, diversification. I mean, like you said, hold on to stock for hopefully have. Excuse me, I forget the brothers' names, but 10-year horizon. So that was the biggest mistake in my life, selling my half of my HP, my Microsoft.
so yeah, so I mean, hindsight is 2020.
No, it's not hindsight. Is I don't know what I'm doing, Vivek.
Okay, so I think that's different. Then maybe just focus
Just
on
hold.
ETFs. Yeah.
Just hold. Even if you're losing like I am on a few stocks, I'm not going to sell it because I made it's a past cost. I didn't need to sell, and that was my big mistake. And yeah, well,
Yeah. So my own lesson has been, number one is, hey, I don't want to sell the stocks just because the stock has gone down. Yeah, if the business has deteriorated, yeah, I will probably part with with my positions, because at max, you could lose only 100% what you've invested in for a particular stock, right? If I've invested $100 in stock XYZ, max I gonna lose is $100, because of course, if I'm not leveraged, right? But if there's a great company that I've owned and maybe there's a short-term correction happening, maybe it's not a business that has been impacted, that 100 could become 1,000 over next 10 years, decade, right? So that's why I don't want. I would rather manage my risk by, of course, I'm a fan of diversification so that I don't have to sell it, and stay invested in the businesses that I want to own forever. Right? My holding period now slowly has increased to forever. So yeah, but hindsight, if you sold something, hindsight, it looks like, yeah, I made a mistake. But who knew that Microsoft will be Microsoft and won't turn out to be, those other companies of the yesteryears like IBM?
well, then Palmer bought Nokia. I mean, he was a buffoon.
Don't listen to others. Only follow what you understand. Okay. Coming back to Monday. So this is what was a Japanese yen carry trade was happening. But if you're not exposed to Japanese stock market, my question is, do you need to worry? Do you need to panic? Do you need to sell your holdings? And I'm assuming that you are not leveraged up. So you're not getting any margin calls. That's why I don't like using leverage, even though I'm big on options, but I still contain my risk. Or if you don't own the stocks that are not heavily exposed to Japanese market, do you need to worry? Just because the stock market has fallen down whatever percent, do you need to worry about and start selling your stocks? No. And I think that was an opportunity to take out your watch list and see, oh, cool. Now my stuff is on sale. It's like if I like my Levi's jeans, right? A particular number model of my Levi's jeans. Suddenly Macy is putting the jeans on sale, doesn't make my Levi's jeans as a bad product. It's damn something happened in Macy. They want to increase the revenue. They're selling it at a discount. And that's exactly what when I look deeper into it, I'm like, there is nothing that has changed in the stocks that I want to own or the stocks that are on my watch list. those are like down 5%, 6%. I'm like, okay, it's time to shop. And I shopped. So I added to some of my positions. I reduced some of those hedges that I had on because the market has fallen down for no reason that is anywhere related to the economy or the businesses that I own. So I'm like, okay, let's take a little bit of advantage of it. And I have no idea whether it's, how long will it continue. So not gonna go all in. Could it fall more on my whole thought process at that point of a time was, hey, let's use some capital and like 25%, 25 to 30%, 1/3 of capital that I want to deploy, do it today. And if market continues to fall down, if it falls down another 5, S&P falls down another 5%, or then I'm gonna add little more, because there was nothing that I was aware of or I could see that has anything to do with the businesses that I own. So this is what was happening and known as Japanese yen carry trade that had, unveiled. Now it's basically unwinding itself. I don't think, I have no idea, but I was listening through some podcasts and reading through some articles that all the Japanese yen carry trade has completely unwinded. It says 75% have been unwinded and 25% they are still, going through the process. Some of the hedge funds have lost tons and tons of money, right? But if you're not leveraged, as a retail investor, it's an opportunity for us to take advantage of this situation. And this not only brought down the stock market, we saw even on the crypto side, like I said, Ethereum was down 25% because Jump Crypto was selling tons of Ethereum. Maybe Jump Crypto is a kind of a sister concern of Jump Trading, which is a big market maker, just like Citadel. Maybe they were exposed on this carry trade. We never know. You never know which firms have exposures where, right? Where their fingers are stuck. So suddenly we see funds blowing up, selling whatever they could, even though those companies are still fine. And if you are ready, you can give them exit liquidity and buy those things at much, much cheaper valuation, right? Hey, if you liked NVIDIA at 140, and it was available at 100. I'm not saying you should buy it, but if you liked it at 140 and it went down to 100, you should be buying it. Or pick any stock. It was an incessant selling across the board. So that is what was yen carry trade. And where did you get the information about yen carry trade on Monday? I just went on to Twitter and Google and says, hey, markets, what's happening in the market? And then that's where I found out, okay, yen carry trade. And then I dig deeper to figure out what this carry trade is. So it's not, and what I then realized is that, hey, this has been happening for years. It's nothing new, just that as a retail investor, we don't know, right? We are a retail investor and I'm not a institution. I don't do any Forex and all that stuff, but this has been happening for years. This has been like a trade that's like pretty common among those institutional investors. So it's not, things work perfectly as long, till the moment where they stop working. So when you see this turmoil in the market and all that stuff, there's a nice video of Peter Lynch that I do want to play, which you should listen to.
Study history. Study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly, but we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks.
That's it. Very simple. Market goes up, market goes down. It happens. So, but while we are living through it, we feel that it is unprecedented. It is only happening to me. Well, no, market is not against you. This is what the market's nature is. That's how markets behave. So anyway, this is nothing. And especially I love this. So CNBC was back talking about markets in turmoil. So someone I think it's from Compound, they looked at, and maybe we could use this as an indicator, the return of the market after, from the day when CNBC is playing markets in turmoil. They've gone back all the way to 2010. So May of 2010, markets in turmoil, 1 year forward return was 21%. And as of, I think this was as of maybe end of July, is up almost 367%. So it looks like 2010, 2011, and beyond that, we didn't have too much of a turmoil except 2015 and 2018, where we had a market tantrums because Fed wanted to increase the interest rate. And then finally in 2020, where we had the COVID hit, right? So almost every day, first, second March, third March, almost every day there will be markets in turmoil, right? What happened? We're still fine. Markets have still returned handsomely after the markets in turmoil. So just don't get stressed out. If your position sizing is okay. And number two, which I always want to talk about, that if you don't need invest in this market, what you don't need for next 2 to 3 years, there's no need to panic at all. Markets have delivered handsome results after markets have been in turmoil. Anyway, so that I thought I'll share this. Maybe someone should have built an indicator based on this. Anyway, so that was a little fun. So despite whatever happened on Monday, it was still pretty good, man. By end of Friday, we are still up 12% for the year. What more do you want to ask for? How greedier can we get? 12% is still way, way, way better, right? So there's nothing to worry about it. But I guess this is a time when everyone else is in a fear mode, that we can see with VIX like shot up to 65. I want to be in a bullish mode, right? That's what Warren Buffett said, right? Be greedy when others are fearful. When others are fearful, which is right now, the rest of the market is, that's where you can get the best deals. When everyone is clamoring for the stocks that you want to own, you're not going to get the stocks at the right price. We all go and shop. We know how the pricing works. More demand, higher prices. Less demand, you get a same product, you're going to get it at a cheaper price. Unfortunately, stock market is the only market where buyers don't like discounts. Buyers are scared of discounts. And that's the thing that we individually as a buyer have to work on ourselves. Hey, if it's the same stuff and I'm getting at a discount, damn, I should take advantage of a discount. Unfortunately, our behavior is completely different, right? If I'm buying a car, I would love a discount. But if I'm buying a stock, I hate. I'm scared when the stock is at discount. Happens with me, happens with everyone. No one is immune to it. But yeah, things were available at discounts. So that's on the market side. What else? Now maybe we get into some of the stocks that you had requested for in last meeting and review those. Anything else caught your attention last week? All right, so Sam, you had asked for Cisco. So let's look at Cisco. It's the same game. I don't know what I'm gonna see. I just pull up the latest data. So let's review Cisco together. Again, any investing thesis consists of two things. And I've what do you say, learned my lessons by losing some money in the market, and everyone has to pay the tuition. So I paid my tuition, but now I've realized every investing thesis consists of two parts. One is number, one is story. This one just shows us the number. If you know the stock, then you need to know the story behind the stock. Okay. I don't know the story behind Cisco. Probably I can talk about a little bit, but I don't know because I don't own the stock. So don't think whatever this is going to reveal, don't think that, hey, this is the end. This is just one part of the investing thesis, which is numbers. Then story, if you want to invest in individual stocks, you need to know what's the story behind it. Because both of them should determine what's your investing thesis should be. 2021, everyone was investing in all the new EVs or new SaaS companies based only on the story. Just based only on the story. Right? And that didn't turn out to be good. And there are other investors who will invest just based only on the numbers. I love some of those investors, but they tend to lose a lot of opportunity cost. Numbers wise, Amazon was never a good stock to own, number wise. Story wise, it's a great stock to own. But so you need to know the both sides of the things. What's the story? What's the numbers? Okay. So let's look at Cisco as a numbers first. What are you looking at? P ratio 15, pretty cheap as compared to the market. Forward P even cheaper. It's got a net income of total revenue of $55 billion, net income of $12 billion. This is TTM numbers. A good amount of a cash. Total debt is, and they got a decent debt also, right? The cash on balance sheet is 22 billion, $31 billion of debt. But I guess it's a steady Eddie business. So they have a predictability in terms of the revenue and should be willing to, be able to serve the debt. Market cap and enterprise value, yeah, because the difference of $10 billion. So free cash flow, $3 per share free cash flow, and stock is trading at $45. That's like a decent 6 to 7% free cash flow yield, which is decent, which is good. So that's on TDM numbers. Let's see, is it a high quality business? Just looking at the numbers perspective, last 1 year, 62% gross margin, return on investing almost more than 20%, 3% like dividend, cool, right? This is better dividend yield than S&P. Nice operating margins, profit margins, revenue growing at CAGR of 11% last 1 year. I want to extend it to 5 years. What happens in 1 year? We don't want to judge a company based on just 1 year. I want to look at a longer trend. This company has been around for more than 30 years, even longer. So 5 years, the revenue CAGR is only 3%. So it's not a hugely growing company, pretty mature in terms of its business. So to me, it looks like a pretty mature business, and hence doing the right things to return, just generate steady cash flow. When the company is now maturing, all they gotta do is provide you dividend, provide you with a decent cash flow, maybe do a share buyback, because there are not many reinvestment opportunities. Right? And that's what I think it is doing. So from a valuation perspective, not expensive. So numbers wise, I don't see any issues in this as a company, right? I look at, let's say, Buffett rule of investing, or what financial metrics Buffett look at. 1 year, all look good. 5 year, not bad. Except that the retained earnings are not growing. That means they're earning less and less every year. They're still earning, but they're earning less and less. So now, based on whatever last 2 minutes I've spent on this, here's my reading. This is a mature business, and I know Cisco is a mature business. Returning capital to shareholders, so looks like not much of a reinvestment opportunities, right? So it's not going to be very volatile. It's going to return you, 3, 5, 6% return on your capital, but don't expect it to have fireworks. Numbers wise, all look good. Story wise, I don't know, is there any growth story left for Cisco? Doesn't look to be the case. They've been trying to acquire a lot of companies to turbocharge their growth, right? From App Dynamics, Splunk, WebEx lunch eaten by Zoom, right? Now HP buying Juniper. I'm not sure. Has Cisco found its mojo around AI? Haven't heard anything. Right? All the Metas and the other tech companies are looking towards different architecture, more open architecture, and maybe looking at specialized networking companies. One of the companies that I reviewed, didn't review it yet. I think I've almost built my investing thesis on it. Like Microsofts and Metas are going towards those specialized networking companies, then depending on Cisco's. So from a story side, not that great. At least that's what, I don't own Cisco, but that's like, hey, being an investor and general reading, that's my take is. So Sam, you had asked for Cisco. So if you have a different story, then you should think about it. For me, this is like a steady eddy. Don't expect too much fireworks on the stock, but it will return you capital, and it's like owning a bond, right? Stream of income. That kind of a stock. Unless there is a change in the story that you can tell me, which I am missing. All right, so that was Cisco. I would like to understand the terms used in spreadsheet better. Do you suggest any references? You can just Google for it what gross margin, SG&A margins are. But maybe I think next week we'll have a little lighter earnings. Maybe I'll cover those Buffett thumb rules. I think I covered long back in one of our previous sessions, but I had no way. I wanted to just use that for building my own investing thesis, which I've now started to use. So that's Cisco. What's the next one? Applied Materials. Who had asked for Applied Materials? They dialed in with iPhone. Is the same iPhone still there? Because the requester is not there, then I don't want to, waste other people's time. Applied Materials, are you still there? Or I'll skip. Going once.
Hi, Vivek, this is Sridhar. Sorry, iPhone comes with like that. Yeah, I need to change the name.
Oh, okay. No, I don't, because, it might be default setting, so I don't know if the same iPhone is there or not.
That's me.
All right, so let's go to Applied Materials, AMAT. Okay, let's see what it reveals for us. So AMAT is in Basically, it's in a semiconductor. It's one of players in the overall value chain of semiconductor. It builds the machines that companies need, IDMs need to create chips, right? So that's where nowadays, over the last, I guess, 12 months or so, everything related to these chips have been going crazy. Before that, let me address a comment from Steve. How about discussing business model market drivers for these companies? Example, Cisco. Yeah, Steve, if you're doing the overall, let's say when I build my investment thesis overall, I do look at the market opportunities, business model, how they make money, what the competitive strength is. But this one are the kind of just quick 5-minute,
Okay.
not even 5-minute overview of
Okay.
it. Okay.
Yeah, I just look at it from an investing standpoint. The more you understand about what is the business model of the company, like what is their business, what do they do, and what might be the market drivers like that might impact their business. You know, for example, like you said, Cisco's into networking. They've been into networking for a long time. So if we hear about like a data center, you know, like a lot of data centers or something, they're going to be built. If we catch wind of that, we might want to look at Cisco and say, well, maybe that might affect their business. You know, so understanding those market drivers is something that I think is useful.
Yeah, absolutely. And that's where because these numbers are all history, right? So that's where the story will come in. Hey, maybe because we're going to see a lot of growth in AI and growth in data centers.
Yeah.
Can Cisco be able to,
yeah. And understanding who's going to be affected by that, who are the companies who are going to be affected by that growth in AI, and be able to, put those on the watch list, as it were.
Yeah. So there was another question, any example special in networking company? So this is the one which I brought up because when I looked at Arista Networks from a numbers perspective, it looked to be amazing, but I didn't have any story. I don't own any stocks. So I said, okay, I just did a small position, initiated like end of July, and I'm building my thesis. This was their recent earnings. So yeah, I started building this document like this week. I'm not done with it yet. So this is where I look into business, their history, platform, what do they sell, what's their product line is, philosophy, whatever, market drivers, competition, and stuff like that. So, but I don't own Cisco. I don't think I don't want to own Cisco at this point of time, so I'm not building the document on Cisco. But yes, you're absolutely right. We need to understand that. If you are trying to build your complete investment thesis on any company or any business. Okay. All right. So let's look at AMAT. Brought up by Sridhar. Numbers wise, let's look at revenue, $26 billion revenue. So not that huge. But out of that, $7 billion as a net income, which is great. It's almost like 25% net profit margin. It's not a software company. It deals in the machines and the hardware. So 25% net profit margin is good. They got a 7. So they have a more cash than debt. So not a problem when you look from a debt perspective. 34,000 employees. That's fine. Looking at the quality of business means your gross margin should be higher than 40%, return on investment at least 20%, dividend estimate, any dividend. So not a big dividend payer. 28, 29, 30% operating margin for a company dealing in hardware is fine. Like I said, net profit margin is almost 25%. Revenue, not growing that much. But let's go back and see about last 5 years. CAGR or 3-year CAGR, right? So yeah, so revenue not growing much, but that doesn't mean it can't be a good investment, right? Don't see anything that is causing alarm bells. Looking at, again, PE over the last 5 years have been 16. So currently it is trading at an expensive valuation than where it has historically been over an average of, let's say, 5 years. And it is because there is so much of all hype around AI that, it's gonna basically show up in higher revenue for the coming, quarters and things like that. So, yeah, I guess pretty good company when you're looking from the numbers perspective, that their margins are fine. They are, responsibly returning capital, paying a little bit dividend, growing their EPS also, and debt to equity, not taking too much of a leverage. All that numbers look good. Also growing the retained earnings. Let's look at 5-year. Looks good. So this is something that I want to put it on my watch list, because numbers look great. Now the question is, I don't know the story behind it. I only know that they do produce machines that are used by these chip manufacturers like TSMC or Intel, Global Foundries, to actually create chips. Now, so it means few things you need to understand. Generally, semiconductor is a cyclical business, right? So they will be impacted by the cyclicality in this business. Number two is, right now, every semiconductor company is being trading at a higher valuation than in the past, which also we see it right here, that it's been trading at almost 25% higher than what it has been trading for over the last 5 years of an average. Right? So valuation could be concern, but that's in a cyclical business. But other than that, I think the numbers look all cool. Numbers look all good, guys. I mean, interest margin not too much, because I don't have too much of a leverage. So this is not a company that will, if the market turns around, could go out of business soon, right? I don't have that risk. But the risk which I could have at this point of a time is, hey, is it already bit of too much? But then you don't get good companies at a cheaper rate anyway. So this is something which I want to put it on my watch list, and see if I can buy and get at a cheaper price. Again, or find out more about the story. Maybe this valuation justified based on the story that that I don't know of. I have not followed Applied Materials. Maybe they have some IP, they have some moat against the competition. So if you, Sridhar, you ask for it, you know that, then this may be something that you want to look at. Okay. All right, the next one. A firm. Alfred had asked for a firm, so let's bring up a firm. All right, currently trading at $25. So first, what a firm do? So it's a BNPL stuff. Or am I confusing? So Afterpay was BNPL. Fred, a firm is also in BNPL segment, right? There have been so many companies in this whole space. Sometimes I get confused. Buy now, pay later. Klarna, a firm. I think a firm is in buy now, pay later space. Is a Max Levchin is the CEO of the company. Anyway, so let's look at PE, not super expensive. Looking at trailing 12 months, right? $26. Oh no. Why shows me almost similar numbers? Hold on, let me pull up a firm numbers. There we go. I thought I knew a firm doesn't have like $25 billion of revenue. Something was wrong. Okay. So P not applicable, probably they're not making any money. $2 billion revenue. Yeah, that looks like a firm's. Net income negative, 678. So probably not making any GAAP net income. Well, let me see if they make any operating income, right? Company maybe, I'm okay if they're not making GAAP net income, but at least operating income they should make. Debt to equity, huge. This is a little concerning for me. It's a software company. Why is it taking on so much debt? $1.62 billion of cash and almost $5 billion of net debt on their balance sheet. which is concerning to me. Okay. All right, let's look at, I'm not too happy. Is it a high quality business? Forget about the stock. Is it a high quality business? Looking at the company has not been around for long, or at least not in an IP. I know we don't have financials for long. It's been in public market for now 5 years only. So that's all we can look at. Last 1 year of data doesn't look to be that great. Negative operating margins, and you guys know my feeling about the companies having negative operating margins is, hey, you will always need a ventilator to survive. And that ventilator has been provided by VC funding. That ventilator has been provided by zero interest Fed loan, the money that you can borrow at a very low interest. Unfortunately, both those ventilators have been taken away. In 2022, Fed started to increase the interest rates, and VCs are no longer, they don't, have a appetite to sponsor expensive projects that are not making any money. So unfortunately, so if you're not having any operating income, that makes it tough for you, right? So forget everything else. Looks pretty bad. Looking at others, PE ratio, there is no earnings, so you can ignore all that. No, man. The company, yeah, I'm not too happy with it. During the last 5 years, yeah, situation doesn't improve. So numbers, not good. Now let's look at what the story could be. Right? And that's where now you need to understand, is the story attractive enough that this could grow into a great business? This is all past. Story will tell you the future. In the past, Amazon may have like numbers like these, but the market that they were addressing, the optionality that Amazon had, does a firm have the similar kind of a story behind it? That's what you need to know before you decide to, invest in this or not. A firm is in BNPL. BNPL started from Australia, right? And after 2 to 3 years of its existence in Australia, there's a report from Australian government around the whole BNPL. And eventually, the customers were not well off. I mean, the customers were not benefited after 3 years of BNPL being pervasive in Australia. US, it's a newer phenomenon. We started seeing BNPL coming to US somewhere around COVID. Started to see the increase of these companies, Klarna, Affirm. Square paid what, $26 billion for Afterpay. What a horrible investment. And I'm an investor in Square, so I didn't like it. Suddenly everyone is looking at BNPL as a next mantra to increase the sales. But I don't know. To me personally, I'm not a big fan of a BNPL. It market itself as helping consumers to avoid fee and all that. At the end of the day, this is a discounting business model. 2 years ago, during COVID, maybe 3 years ago, I did a deep dive into how the business model works. And I'm not a big fan of the model and its sustainability over longer term. Right? And you look around the world, it's not been a great business for a long-term perspective as a standalone. Could it be a loss leader and help you in other kind of a business? That's what I'm hoping. Maybe Square can do it. Take its Afterpay as either as loss leader, or use the synergies that between Afterpay and its a Cash App and the other business. Maybe a firm. What else do they have? I don't think they have anything. Pat says Amazon had pumped $2 billion in a firm. Yeah, I guess Amazon, even Apple had tried a firm. I guess Apple had used a firm for their initial pilot. And maybe wrong, because this is maybe, I think, 2 years old stuff. My only thing is, Yeah, I'm not yet sold off on its a whole BNPL and its business model. So, but I could be wrong. I don't own the stock. I don't watch the stock. So if you have a different story, maybe that could determine why you could invest in it. Numbers, looking at the numbers, I don't think it's investment worthy. Now the story has to convince me otherwise. Okay. So that's a firm for you. What's the last? Do we have? I think I have one more. Let's go back to the doc. BA, which is Boeing, from request from Pisheng. Let's look at BA. Let's close down the CSCO. Let's go to BA. What does BA brings? So it looks like no earnings. Looking at last trailing 12 months, forward P. Oh, yeah. So ignore that. PEG ratio 6.53. Looks like earnings are very less, and it could be because maybe the last trailing 12 months of earnings. Yeah, negative $3.44 billion. Decent amount of a cash, but look at the difference between market cap and enterprise value, which is almost $30 billion. Not 30, $45 billion. That's their net debt that they are holding on their balance sheet, which is huge, which is big, right? So 171,000 employees. From quality perspective, last 1 year, revenue has grown, but otherwise the margins perspective, pretty bad as business. But it is in a Boeing. I don't have to tell you what business it is in. Let's expand and look at how they've been doing for last 5 years, right? Average 5 years profit margin doesn't paint a good picture. The company has been around for decades, right? Last 5 years doesn't paint a good picture to me. Okay. Does this change anything? They've been increasing their share count. Market cap has grown. Let's look at last 5 years. Nah, doesn't change my mind. On a rule of 40, which I don't think we should apply rule of 40 for Boeing, it's like 9. Let's look at if would Warren Buffett consider it as on its list? Will he put him on its consideration list? We'll go for last 1 year story is bad, 5 year story is bad. So numbers wise, pretty horrible. I guess that's what it shows up in the stock. Also, so now the question is all about story. Hey, does it last 12 months, no free cash flow? So I don't even think I should use the free cash flow or try to do some reverse DCF to even talk about valuation, right? Numbers are bad, but if you are a cigar butt investor, you could still say, oh, business is pretty bad. We got a new CEO in Boeing. I think he started last week, came from Rockwell Collins, from a defense company. Maybe he'll turn it around. Maybe there's one puff left in it. I'm finding it so cheaper from a valuation perspective. Maybe I want to get an exposure. Maybe. Or the other one, which is my investing decision. And unfortunately, I hold this crap. Only this is it. Damn, it's a strategic company for US, right? And because, I mean, how many companies do we have which actually make planes? 2, maybe 3 with Chinese now in play, but it's Airbus and Boeing. If we let Boeing fail, that's going to be a big black eye on US manufacturing. And we basically are then 100% dependent on foreign companies, right? So only reason I'm still holding my Boeing stock is it is strategically important. Now, if that story works with you, maybe you want to position it accordingly. Right? I'm not going to make it like a big part of my portfolio just on that story. Numbers wise, doesn't look to be very great. it could be a turnaround story. It is, because history has been pretty marred. Recent history with the Boeing, with all 737 Maxes, all the quality issues. The other story could be, what worse can it have can go with Boeing? It's already sitting at the bottom when it comes to all the bad stuff that has happened with its business. How worse can it go? Now, if you want a bottom fishing, you want to do it, maybe that's a story that you could look at. Right? So it's all about the future story on Boeing.
When I rode airlines in China, I wonder why, I'm nationalistic, and I'm going, why don't they have more Boeing? They mostly flew Airbus. But Airbus it is a lot more comfortable for the passenger in a Boeing, in an Airbus than in a Boeing. And Boeing got complacent.
I think Boeing also had some recent wins. So
No, excuse me, that's old news. The planes, but
no,
a lot more comfortable.
Yeah, I don't know about a comfort side, because there are different models of different planes. So I don't think I don't even know what model of Airbus is the equivalent of Boeing, right? It's A320-787. Again, I'm not from an airline sector, so I don't have much idea about it. But Boeing also had some recent wins in terms of order of new planes. But again, it's a turnaround story. Things have been bad for Boeing. So all numbers look bad. Go back 5 years, look bad. Go back 3 years, they look bad. So now, if you are kind of an investor who wants to invest in turnaround, so-called special situations, sure, build your story and then invest it accordingly, position size it accordingly. Steve says Boeing got too big and bureaucratic. Yeah, it was run by bean counters. That's one critique of Boeing is this was run by bean counters. To save dollars, they outsourced the manufacturing to Spirit Aerosystems. Now they bring it back in. And I'm sure the investment analysts or those analysts, those who had convinced management or the consultants that had probably shown them the benefits of outsourcing would now show them the benefits of bringing it back under its fold. So yeah, it did. That's one critic, is that it had veered away from being a manufacturing company and was being run by finance guys. So cultural change, it's not going to be, it's a big ship. Big ship takes a lot of time to turn around. Do you have that much of patience and what if it doesn't turn around? I think it's Charlie Munger, Warren Buffett says, right? Turnarounds seldom turn around. So build your story and then look at it. I hold Boeing. I've been selling options to reduce my cost basis. It is in my retirement account. It's a strategically important as an industry, as a company for US. That's my story. So I'm not gonna have it become big portion of my portfolio. That story is not strong enough to put a huge amount of my portfolio in it. Okay, so that's our previous week. Next week, I already have Sam. You had asked for Renaissance Electronics, so I'll review that. Fred, you had another one, which is Viking Therapeutics, so we'll review that. We can take 3 more requests. Anyone else for next week? Again, we're just gonna go through these numbers, but as I said earlier, you have to give me the name of the CEO and the market cap for it to be on the consideration list. So Ravesh, LRCX, tell me who the CEO is and what's the market cap of the company. I don't want share price. I want market cap.
Vivek, I have a suggestion. Why don't we look at the companies that have fallen down 50 to 60% and review them for your assessment, looking at whether they are worth investing or not, instead of looking at most of these companies have already gone up. What do you think about that? For example, PayPal.
Yeah, so Yeah, I mean, PayPal, I had reviewed it earlier, let's say a few months ago, and I gave you why I'm bullish on it.
No, I know, but
Yeah, but I get your point. I'm not sure. I mean, I don't generally run the screeners based on the company that have fallen down. But if you're running something that you want me to review a company, yeah, bring it here.
yeah, Nike is one of those companies.
Okay.
Tesla, SMCI.
Okay, Pats, you have to give me the name of the CEO. I mean, I know the CEO of Coupang, I hold it, but the rule of the game is you have to give me the name of the CEO and the market cap of the company. So we got LRCX, I got, okay, and I got a Visa. So Pats, I need Coupang's CEO name, and it's oh, anyway, I'm gonna review Coupang's earnings today. Yeah, Bomb Kim, right? What's the market cap? All right. So earnings next week. $40 billion. Cool. So next week, nothing on Monday that I am interested in. Nothing on Tuesday. I got C Limited that I want because I hold C Limited. This is what I am interested in. Tuesday, I also want to look at new because this is a company on my watch list. I don't hold any positions in new. It's a banking company, and I'm not too close to figure out how to evaluate any banking company, but it's been pretty successful online. I did it, reviewed it as S1 when a company became public a few years ago, but I don't own this, but I want to keep it on my watch list. What else? I know next week is a little light. The last 2 weeks have been crazy. Stoneco I sold also, nothing. Alibaba, JD.com. I guess no HNR, nothing else. Applied Materials, we already looked at it today. That's it. 4 things, much better, much better than what the previous weeks have been. It's been crazy. So, all right. So let's move on. Vivek, before, yeah, Coupang I've reviewed a few times because I've been in this for some time. I like the company. And today I'm gonna do a review of earnings as well. ELF reporting next week. I don't own ELF. So it is, no, ELF doesn't report next week. All right, so bunch of earnings that we're gonna go through. Let's look at a few of them. Last week tanked big. ELF tanked. I've not invested in any beauty products. I'm not a user. You can tell. I'm not a user of these brands. So I don't know how to and I've not looked at these companies, ELF, Ulta Beauty, and see, but yeah, okay, I can add it instead of a Coupang. Maybe we'll do a quick number-wise review of ELF. And if you are interested in the stock and you looked at its business, etc., I'll bring in the numbers, you bring in the story, you add the story to it. And then as a group, we figure out, whether it is convincing enough to invest as an investor, right? I don't own the stock. I don't know the story behind it. I can give you, like I've done for other stocks, 2-3 minutes overview looking at the numbers. And Pats, if you are interested in it, maybe you bring the story. I'll bring the numbers. Okay. All right, let's do a review of a lot of earnings. Okay. Unless there is anything else. Now I have, only thing I have to look at is earnings, and maybe let's go through some of these other newsworthy items. Hey, I had a few more. What happened? Where did I push that out? Oops. Hold on. Okay, yeah. So let's go through some of these and then we can come to earnings. Or what do you think? Should we do earnings? Earnings or some other market news around the stocks? Tell me. Okay, other markets news around. Okay, so let's look at those and then we can come back to earnings. So I saw regulatory actions heating up against the tech companies. So you see Amazon's investment into Anthropic is now facing UK merger investigation. I mean, it's the same case everywhere. Also, I think in the US side, Justice Department is is US side or is it a UK? They're also looking into Microsoft investment in OpenAI and all the stuff. So right now, for Amazon perspective, they concluded their phase 1 investigation. That means, and now they decided to move ahead. That means UK Competition Authority thinks that they have a case to go and do more fact finding and to see if they want to really bring to the legal fight. So, but prima facie, it looks like they think that this investment is probably hurting competition in UK. So to refresh your memory, Amazon had committed $4 billion with $1.25 billion as an initial equity stake, and then another $2.75 billion, which was finalized earlier this year. Other thing was I don't know whether you will actually go through it or not, because Amazon doesn't have any board seats. They have no representation. They are kind of an equity investor. But one thing which I've seen happening in the space is if all of these big companies are using these investments and kind of are doing what is called as a revenue round tripping. For example, NVIDIA has invested in many of these smaller companies, and those smaller companies will go ahead and buy NVIDIA chips, right? So basically, you're converting your equity into your P&L side of the house, balance sheet, and the P&L. That games are going on. Similarly, Microsoft, the same stuff. Google does the same stuff. You take stake in startups, and those startups will then turn around and use your cloud basically your cloud infrastructure, right? So it is, I don't know, from a legal perspective, I don't think it is illegal until you declare that you have the third party, that you have these inter-party or inter-party related transactions, right? So regulators are now warming up. This is one stuff, which is, hey, they're looking at all these investments in AI form. CMA is also looking at Microsoft's investment in OpenAI. I think even US side, Justice Department is also doing the same thing. Other thing, we saw, this is, I guess, like more market moving stuff, which is Google, the judge has now ruled that the Google actions violated the antitrust laws. And now I guess I think there's a meeting in September to figure out what the remedy would be. But it happened on Monday. There's a ruling from Judge Amit Mehta saying that Google has held a monopoly in internet search and they have misused the monopoly to curb competition. Being monopolistic is not illegal. using the monopoly to keep competition out is illegal. And I think that's what judge has determined, that Google has unfairly used its monopolistic position to shut out, its competitors. And this all stem from the fact that Google pays Apple $20 billion, $19 billion. We don't know the details. Every year, Apple collect the check from Google for making Google as a default search engine on iPhones. And that's what basically, judges, all the concern is that Google is using its distribution reach and it's constraining, other rivals. So we'll see what happens. But a lot of this reminds, and again, I wasn't even in US. I wasn't invested in US market. And this reminds us of the similar antitrust cases brought against Microsoft during those days of Netscape Navigator versus Internet Explorer. Microsoft's still around. They've done wonderfully good. I don't know what remedy that Justice Department may seek for. Do they want to break up Google into search as a separate business? Do they want Google to pay up some, a financial fine, or they want Google to not have that exclusive arrangement with Apple? We don't know. So it's on September. I don't know where the user. Yes, I think there's somewhere September 5th or 6th, somewhere is wherein they're going to look at the remedy. And then Google will have a chance to also appeal for it, just like Microsoft did. Microsoft had appealed I think the decision was to break up Microsoft. Microsoft appealed it, so that breakup was overturned. So I think it's too soon to make any decision on Google if you hold Google position, right? It's not. And I don't even understand, if Justice Department had to bring in the case, they should have done it sooner, because now Google has got a lot more competition in search market. You got OpenAI search, you got a Perplexity AI, which search, someone says they are actually much better than Google, right?
Yeah, this is getting silly, because it seems like AI will probably just overtake as Google search anyway, and Google's going to have to figure out what the heck they're going to do going forward, because they have like a competitor to the chat, the GPT, but you don't hear anything about it. So Google's they got to get their act together if they're going to stick around, because I think the AI is just going to eat their lunch on the search.
Yeah. Yes. I mean, Google has they started with their overview. If you do want to Google search, they're also doing the similar stuff what Perplexity is trying to do. But this is like not if Justice Department had to bring in the case, they should have done it sooner. Now Google has a lot more evidence.
It's kind of stupid to do it at this point. It's like, what's the point?
Exactly.
Where were you like 3, 4, 5 years ago?
Yeah, exactly.
By the time we finally get this all resolved, it'll be kind of a moot point.
Yeah. So I don't know, but I'm not selling my Google shares. I'm like, okay, this may result to nothing burger. And if, this cause Google shares to drop, maybe there's an opportunity out there, right? So that's what happened Google. And then comes to Apple, right? There was a news around maybe how Apple is trying to make money from AI. And again, the thing is they may be able to charge users maybe $20 is what analysts are expecting to use Apple intelligence. Apple doesn't want to want to create their own term. Their AI is not artificial intelligence. It's called Apple intelligence. So Apple may charge $20 for you to use Apple intelligence, which I hope will be better than what Siri is. Siri is the worst app, AI. It's not even AI, but it's the worst voice assistant that we have. But I guess with with the usage of AI and LLMs, the whole idea will be your Apple phone will become your assistant, will help you in day-to-day activities, and you may be willing to pay $20, or maybe they will bundle it with whatever Apple One offering that they currently have. But yeah, today the ROI on AI investments, nobody knows. We are just building the capacities, but it is difficult to even figure out how you're going to make money out of it. Maybe Apple could make it if they start to charge it. Number two, if so, this we reviewed Apple results last quarter, right? The services revenue grew 14%. That was the maximum growth across all other segments. So it was like $24 billion. And I think out of the $24 billion, maybe $20 billion is, no, so probably $5 billion a quarter is coming from Google. So we'll see what happened with antitrust, and Apple may be able to, make money out of it, and by charging users and basically pass on the cost of running these expensive inferencing computations to consumers. Now, number two, if you start to use AI, you're gonna get locked with the Apple ecosystem. Not that consumers are not already locked, but the beauty of the AI is the more you use it, the more it learns about you, right? And it is in contextual. It is based on your data, based on your history, based on how questions you, the way you have asked questions in the past. It's very, very personal. So if once you start to use AI, it is very difficult to switch to another one. So I won't be surprised. Maybe Apple will give it for a free. It becomes a loss leader in the business just to have you use your AI, and so that then, you just can't go out to Android. But for that, the AI feature has to be better than what Siri is today. I guess Apple will get it over there. And then even if Apple's revenue is like 4% growing, the stock will still probably do much, much better, right? The AI could supercharge the revenue for Apple and build even a stronger walls around its garden. So that's on an Apple AI. Maybe they're gonna charge users. Supermicro, another news on Supermicro. They announced 10:1 split, but looks like the split couldn't save the stock. It was down 20%. What happened? I don't own it, so I didn't review its earnings, but this article I read through it. Earnings 6.25 versus 8.07, so that was a big miss. Revenue was 5.31 versus 5.30. That was in line, I would say. And gross margin had dropped to 11% from 17%. This is a gross margin, not even a like operating or a net profit margin. For a software companies, look at Microsoft, look at Google's, look at what other software companies, maybe look at Oracle's. The gross margins will be up more than 60%. Gross margins are more than 60%. That's for your software company. That's why you get higher multiple. Supermicro gross margin is 11%. So if you look at your P&L statement, gross margin sit right at the top. Then you have other costs that you deduct from it, operating margin, net income. That's where finally, as a shareholder, I'm at the bottom. What is left for me as a shareholder in this? That's the reason, I don't like this as an investment. Of course, it is growing its revenue like crazy, but you can always grow revenue like crazy by selling at below, they are not selling at below cost. They are having some margin, but you can always grow revenue. But I'm a shareholder. For me, the benefit comes at the end after deducting all the cost. So even if you have grown your revenue, but if your cost has grown proportionately because you don't have enough operating leverage in this, because you need to have a physical technicians, or you're dealing with the materials which are like physical objects, right? You just can't. Let's say if I were to do a software and you have to deliver another software copy, it's cost me zero, you can download it. But if I have to build another rack, it costs me a lot, right? So your cost, you don't have that much of operating leverage in this business. So
It's
I
not,
guess that's what,
is it very diversified? Or they only got one or two products?
I mean, what, again, my understanding of Supermicro is they basically build the servers and the racks that go in the data center. So and now today, not today, but last few quarters, why they have been like super in the news, because everyone wants AI, and Supermicro uses NVIDIA chips to build those and assemble those and then put it in, right?
Yeah. I see here that they're going to do a stock split. I didn't know they were going to do it because I haven't bought this stock for a while because it's too darn expensive. But you know, now they're going to do a stock split. Hopefully it doesn't go the way of NVIDIA after the stock split, because NVIDIA just kind of basically tanked after the stock split.
Yeah. So anyway, I don't build my thesis based on a stock split, because it's the same pizza. Doesn't matter how many slices you create it. But I know short-term market does either reward from a stock price perspective, or in case of NVIDIA and I think some other stock that recently announced stock split, it didn't help them. Even looks like on Supermicro, the stock split announcement didn't help the stock as such. So stock was like down, what, 20%, what we looked at, right? SMCA was down 20% after earnings. So let's look at, how, and I don't own the stock, so but let me just bring up and see what the recent result of SMCI is. I'm on quarterly, right? Oh, this doesn't have a, oh, come on. Okay, we do have. So revenue revenue has been growing over last 2 quarters, 3 quarters, more than 100%. This is because all hyperscalers, they want to build capacity. They want to, like we heard Satya saying, right, that I would rather over-invest than under-invest in AI. Mark Zuckerberg, right, 600,000 H100s, those need to be put in the racks. Those need to go somewhere in the data centers, right? So every hyperscaler, every big company is right now building capacities on AI and want to have all those hardware ready. So this is the one company that assembles the hardware, right? So the revenue has been growing like 100%, 200% year over year. I don't get anything out of this as a shareholder. What I get is, after all the costs are taken care, what's the net income side? So I want to look at my margins. Pretty bad. 11% gross margin, right? 6%, 10% operating margin. Treasuries give me 5%. Again, may not be on the right comparison, but this is where story doesn't work for me. I don't care about the stock, where the stock has gone. I just don't like the margin profile of this business. Compare it with, I don't know, give me Microsoft or Google. Even though these are already $2 trillion companies, look at their margin profile. 70% operating margin, gross margin. And not in it's not been driven by this AI demand. It's been like that for quarters. 40% operating margin. This is like a software company. Pick any good software company, you will see the similar margin profile. So when the rest, the whole stock, the so-called investors are pumping up SMCI, and I'm wondering why. I don't see the margin profile attractive. So yeah, I'm still not convinced that I should buy the stock. Margin profile is very weak, and I don't see the story upfront, right? Because more you grow the revenue, you're dealing with the physical stuff that need to be, soldered, etc., to be done. Where's the leverage you're getting from? I don't see that story yet. So I'll stay away. All right.
Vivek.
Yeah.
Can you explain with her death, Susan Susan W's contribution to Google. She was very quiet. I don't know what she did for Google, but obviously, you know, she did a lot. But would you know what Susan W did for Google?
She was the CEO. She was the CEO of YouTube. So maybe I think she might have been instrumental in acquiring YouTube and running YouTube. And now YouTube is hailed as one of the, you know, along with Instagram, it is hailed as one of the greatest acquisition of all times. So if she was the one who was instrumental in bringing YouTube under Google fold, yeah, I think they contributed a lot. Beyond that, I also don't know much about it. And yeah, God rest her soul. She died, I guess, yesterday after her battle with the cancer.
Well, I can tell you that she has improved my quality of life.
Yeah, I mean, yeah. So, with respect to what?
Being online, my Google experience.
Oh, okay.
When I was in China, when I had to get a VPN in 2014 because they blocked my Gmail, I was in the Google universe. Do you know how fast, even though things were slow behind the Great Firewall, it just got better and better. And you know, YouTube, they used to have suggestions, you know, YouTube, and you know, you discover other outlets. I mean, who knows? Maybe that's how I discovered you and you.
Yeah,
you know.
I mean, YouTube, again, she might have other contributions, but I only know her name. I don't know her, obviously, but I've heard her name as a CEO of YouTube. All right. We got a few earnings to cover.
You consider how many things people have learned from YouTube videos over the years. It's massive.
Oh yeah, absolutely.
I mean, just being able to go on to YouTube, do a search, and say, "Oh, I want to learn this," and there's a YouTube video about it. That's like massive.
And YouTube is a big business. For Google.
Just look at Mr. Beast, right? Mr. Beast.
All right, we hit our 2-hour mark. But if you've been around, you know we never finish at 2 hours anyway. So maybe another 15 minutes, if you guys can hang around. We'll quickly go through some earnings. Yeah, let's stop at 12:15.
So Vivek, I'm glad I joined this group. I'm enjoying the conversations quite a bit. Hopefully my enthusiasm doesn't become a distraction.
Oh no, you're good. All good. I love having these interactions.
And just for some background, I have a chemical engineering degree, and I've worked in a lot of like technology and energy industry and stuff. I got about 30 years, so I've worked in several industries. So I actually have some insights, and not necessarily on the business side, but sort of like on the the nature of some of these businesses.
Cool. So great to have someone who's worked in and have some info around the energy industry, because energy is also one industry where I don't have much information. So all I do is just buy ETF on energy because I don't understand the drivers and what.
It's cyclical. It's cyclical. That's a key thing to understand about the energy industry. Is very cyclical. I currently work in for a large biotechnology company. So I have
biotech company. Did you say?
Yeah, I work for a large biotech right now. Oh. You would know the name, but I'm purposely not. I have to be careful so that I don't create problems for myself.
No, that's fine. Yeah, that's fine. Cool. Good to have you, Steve.
Yeah.
All right, let's get through some some earnings I did tweet or post around my analysis on these earnings. So let's go through those quickly. Okay, so Palantir. Earnings are all good. Revenue up 27%, gross profit 30%, operating income is up almost 1,000%. What else? Net income was usually up, but I focus on operating income. Cash flow was up 60%. So, this company is now actually generating, over past few quarters, have been generating cash flow. 6 consecutive quarters of GAAP operating profit, which means no shenanigans, don't reduce, don't take out your stock-based compensation, don't take out your depreciation. at the end, what's a GAAP operating profit? 6 consecutive quarters of GAAP operating profit. I like it. Plus delivering decent amount of a growth, 27% growth, and they got a $4 billion of cash, which is pretty, decent balance sheet. Looking at the business KPIs, commercial revenue grew 32%. I want to see this growing at a faster pace. My whole thesis around Palantir is, hey, this could become the next enterprise software company. Means it has to be enterprise, means commercial, right? Government, if you're only selling it to government, you don't have much pricing power. Street doesn't give you higher multiple if you're only government contractor or selling it to government. So last when I reviewed it was like 3 years ago, I had my few concerns. One was huge sale coming from government. Number 2, huge stock-based compensation. Over the years, company has addressed it. And like I come and talk about it every quarter. So story has been improving. Billings up 20%. Customer count is up 41% to 593. And the US commercial revenue up 54%. Right? So there is nothing not to like. There probably, I will say a couple of things that I want them to improve upon at the end. Guidance, they raised their guidance on the revenue, on the US commercial, and on adjusted income. So not only the current quarter was good, they also raised their guidance. Other update I heard on the call was a new product called Warp Speed. Basically, this will enable manufacturers, this is focused on a manufacturing sector, to use their technology, basically ontology and underlying their SDK to create their own ERP or enterprise software. Just like if you go and look, I read through the whole transcript of earnings call, the whole idea behind this is, hey, I think we moved away from having a generalized ERP softwares like SAP, Oracle, you pick up whatever ERP software you want to very specialized one, which is specific to my company, right? And if you been around on any SAP side, you know that you pay $1 in license fee and then $50 in professional services fee to customize it, right? So maybe that was a thing of the past. The new one will be to build it from scratch, just like SpaceX has done, Tesla has done. They build all the software that they use in-house, which is very specific to their needs. And what this Warp Speed will do is provide an operating system to these manufacturing companies to build the software with their own enterprise software, and which will be specific to their needs. And of course, they had also signed a new contract. Okay, so the market, so stock was up like 14-15% after hours. This was on 5th August. After 5th August, there was a new news that has come out, which is they recently announced a partnership with Microsoft, and Microsoft will be using Palantir's capabilities to provide and secure the government cloud infrastructure. So with that news, now the stock is, I think on Friday, it was above $30. I think for first time in many years, last 2-3 years, probably it has crossed $30. So from that, all is good news. Now, a couple of things that I want company to improve upon. Number 1 is operating margins. I still don't see operating margins what I would want to see in a software company. So if you really look at it, those are not that great, right? Look at operating margin of 15%, 16%. And maybe it is a new company. They recently started, focusing on selling onto enterprises. They're still building their sales pipe, the sales infrastructure. That's fine. But I want to see an improvement. They have improved over the quarters. So that's why I still like the business, but I want to see them improving more on operating margin side. but 2 is on their stock-based compensation or increasing your shares change. Again, they've been listening to shareholders and doing a good job here. If you look at the annual side, this was like one of the worst stories on how much the shares they offered to their employees in terms of shareholder dilution. But over years, they're now become better. Right? Look at 70% shareholder dilution, 96%. But then they've been improving upon it. I want them to improve more on this one. Third is continuously focus on growing your commercial revenue. So if company continues to execute on these 3, I will continue to own the shares, irrespective of wherever the stock price goes. So that's quickly on Palantir. Any questions? We move on to the next one. Uber. Let's talk about Uber. So revenue up, margin slightly down, not big a concern. Operating income up nicely, cash flow up nicely, and EPS was up. Free cash flow is $1.7 billion. This was a company that people used to wonder how will it ever make money. Now it is actually generating free cash flow of $1.7 billion. I forgot to check I think I do. We can check it here. I wanted to check how much is like a real free cash flow if they don't have to pay it in stock. So yeah, not that great in terms of a real free cash flow, because the kind of issuing $1.7 billion of stock-based compensation. So that's the amount that they've saved from cash. That's reflecting in their free cash flow. Pay attention. This is a game that is pretty common among the companies is you pay in stock so that you don't have to pay cash. And then you come and talk about free cash flow. Balance sheet is strong, $6.3 billion. Revenue has been growing up 16%, 3-year CAGR 40%. Operating income has been growing 3-year like 39%. I think business is doing good. The concerns that I have here is it's a low margin business, right? So even though the revenue continues to grow, but the margin is low. It's nothing going against Uber. The industry is like that. So business KPIs wise, yeah, go ahead.
No, I was going to say, I think there's some future headwinds against Uber, though. I mean, you look at like how AI or if Tesla's able to do the robo-taxi thing and some of these stuff, and Uber, honestly, when I was out of work, I drove for Uber a little bit, so I got to see firsthand how they basically screw over drivers, and they really do. They just screw over their drivers. The people that they depend on to make this business work, they're just screwing over right and left. So I don't see how they can continue. They have a lot of stuff against them. I just don't see how that's sustainable in the long run.
Yeah. So great insight. And I know Uber drivers are pretty unhappy, but I don't know what your experience was, like how old are you talking about it? But maybe in the last 18 months, Dara has been specifically focused around improving the driver's experience.
It's BS.
Okay. Because when I spoke to
a lot of what Uber does is not only for the drivers, it's really to make them look better to the market, so more people will actually use their service, and they can attract more investors, just to keep them on the ventilator, to use your term.
Yeah. So last week we reviewed those Uber numbers, like I reviewed like other stocks, and I own Uber stock, but when I looked at the numbers, I'm like, oh, Auto little. From a numbers perspective, it's not that great as a business itself. Nothing going against Uber. Uber is the best in this business, but the whole business profile itself is not that attractive, right? So
they definitely have improved the business. They've addressed some things they needed to address to make the business a little more solid. But even so, I think that it's short-term relief. I don't see how it's sustainable in the long run. I really don't.
Yeah. So
Vivek,
yeah.
In the first half of 2021, I just want to take a short ride from the the Millbrae train station to the hotel. That was less than 1 mile. No taxis. There was only Uber and Lyft, which I didn't have a mobile phone. So I mean, so that's my addition to the conversation.
No, yeah, I mean,
there were no cabs.
No. So Uber is one thing which I have also called up earlier when we had discussed Uber. It is kind of undeletable app, right? This is something which I will miss if it goes out, right? It passes my snap test, but that doesn't mean that could it be great investment, right? There are many businesses that we need the services, but they may not have turned out to be the best investments. My concern is around.
Well, that's kind of what I'm pointing to. I'm not suggesting that, I use Uber too. I mean, for passengers standpoint, it's undeniable that it serves a real purpose for passengers. I'm not debating that in the slightest. However, what I'm pointing to is that underneath the surface, there are some challenges.
Yeah. So
the long term.
So let's jump on to challenges. I mean, I'll not go through the whole of it. I mean, but they basically gave a good guidance, and also the adjusted EBITDA was good. Then they talked about some of the, I mean, if you're interested, maybe you can check on my profile. You have all the details. But here's my thought on Uber. It's a good company with a good management, but it's in the industry where the profile of the industry is itself is challenged, right? And if you're a company within that industry segment, however great you are, you can't be bigger than your industry, right? Number two, there's no brand loyalty in this business.
Right.
Riders will go whichever service offer the cheapest, right? Our relationship, even though I own business, Uber shares, my relationship with the using Uber is very transactional. It's not long lasting. I only remember Uber when I have to go somewhere, and I forget about Uber once I'm done using it. Right? It's a very transactional. It's like comes in between an experience and then completely goes out. With this profile, it is difficult to become a compounding business. So
you don't really get a chance to know the drivers or anything. You're only use them once. So there's no opportunity to like develop that kind of relationship that you would typically have with somebody you're using. It's not like going to your local dry cleaners where you go to them regularly and use them. You know what I'm saying? So they can't even really leverage like relationships with their customers because it's like you said, it's very transactional.
It's very transactional. So I own shares. I'm still going to keep my position size small unless I see Uber doing, expanding the product offering, making it a compelling one, and reduce the cost basis. So if I own
the advantage they have over Lyft, though, Lyft is only in the U.S. Uber is worldwide.
Yeah.
So if you go to an airport, for example, if you look at the rides from an airport, pickups from an airport, anyone that's coming into the U.S. from outside the country, they're more than likely going to go for Uber. So that's Uber's advantage in the market.
No, other thing, Uber has got multiple businesses. Lyft is only in ride hailing. Uber has got Eats, they got a freight. They got other businesses as well.
And the food delivery, you're right.
Yeah. So out of these two, that's the only reason why I have Uber and not Lyft is no optionality. Uber has got optionality, which saved them during COVID because there were no people traveling. At least they were able to pivot towards Uber Eats, and which
Uber Eats saved them. Oh, I agree.
It saved them, right?
And then they bought Postmates, so they've expanded that.
Yeah. So that was.
I asked both of you, why are people so lazy? Unless they're working, why are they so lazy? Can they pick up their own food? I mean, I've never paid. Oh, excuse me, once a pizza. I've never paid. I mean, I get off my fat ass and I go ride my bike.
That's a conversation we will never be able to finish in terms of.
And then you look at how much they're paying for the delivery fee, right?
Yeah.
You look at the delivery fee cost. You could take that and actually go buy some food for just the delivery fee cost.
Exactly. So I don't think I ever ordered from Uber Eats, but I like it when other people order because I'm a shareholder. All right. Let's talk about Coupang, and I think earlier Pats also mentioned. So Coupang, what happened with Coupang? The stock was down after revenue was up 25%, which is great. Again, the Coupang, for those who don't know, I guess if I've talked about Coupang earlier, so I guess everyone knows already, those who have been around for some time. So yeah, revenue was up 25%, but their margins, operating income down, margins obviously down, net income down. So everything beyond revenue and the gross profit was deeply in red, right? And then the stock sold off. And this is where the algo kicks in. But if you look into the details through earning transcript, there are two factors that contributed to the bad margin. Number one, they have acquired Farfetch, if you recall, 2 quarters ago. So they paid, not acquired, the kind of, I don't know what the exact, how it was structured. They gave $500 million and kind of do a semi-acquisition of Farfetch. So now the Farfetch results are being included along with Coupang results. And Farfetch has been money-losing business. It's basically luxury. It's a place where you can go and sell your luxury goods. And Coupang wants to get into that business. So anyway, so two reasons why the margins were, a pressure this quarter was inclusion of Farfetch results. Number two, they had a one-time impact from a Korean authorities $126 million fine, but that's like a one-time fine. You not gonna have it every quarter. I hope so. They're not gonna have every quarter. So if you exclude these exclude these two, the results are okay, right? If you exclude these two, the EPS would have been 0.07 positive rather than being negative. So I was not too concerned. I think later on market realized that, oh, this was because of this, and then it corrected itself in a day or two later. So I want to look at a business side, the product. So they've got two offerings. One is called product commerce. Another one is called developing offering, which include their newer businesses like Eats, Coupang Play, which is their streaming services, their business in new geographies like Taiwan, etc. So their product commerce active customers, it grew 12%. Adjusted EBITDA on that grew 10%. There's nothing that was too concerning. Of course, developing offerings is losing money because, hey, these are new businesses and they are just investing in it. So I'm not too concerned about it. They also bought $178 million worth of shares. I don't know why they're buying shares. They should be reinvesting in business. But I guess right now, every other investor wants to look at a short-term benefit of paying dividend or buying shares. Yeah, whatever. It is only $178 million. So that's fine. So market got spooked by the drop in earnings. If you look at the pro forma results, ignore Farfetch and that one-time fine, revenue would have been up 18%, APS would have been 0.07. I'll hold my positions. I have nothing which is concerning to me right now around Coupang. And I love the CEO, Baum came. He's so focused and on increasing shareholder returns and making it a profitable, growing business, not mindless growth, but do a profitable growth. He is focused on increasing shareholder value. So yeah, I'll hold the shares. I like this company and will continue to be the shareholder. So that's Coupang. Let's stop it right here. We're already 20 minutes over. I talked about Coupang, so I thought I'll cover that. Also, Pat wanted to know around Coupang. Pat, if you have any other questions on Coupang, shoot. Otherwise, we're done for today.
Thank you. This was really great. I'm glad that I joined the discussion.
Cool. Great to have you. Any other questions? I can hang around for 5 minutes before we call it a day.
Hi, Doug. Quick question. So you had mentioned, we had talked about Costco a while back, and you had mentioned like, oh, if I had the opportunity, if it ever came down, I was kicking myself for not buying it. Now it just popped back up on Friday or whatever it was. But if it had, at what price point would you consider looking at Costco?
See, Costco is a retailer business, right? I can't bring myself up to pay 50 times earnings, that's where it was trading for a retailer, for a retailing corporation. That's too expensive. Where are the others? You know, so numbers wise, it's super expensive. What's it? PE, hold on. Where is it trading right now? 53. Right. So, and I don't know what is a price of free cash flow, 51. That means your free cash flow yield is only 2%. Now, this is not a tech company which I think can grow its revenue by 50%, 100% year over year, right? How much has the revenue grown? Let's say, look at year over year. How much is revenue grown? 7%, 6%. Why would I want to pay like 50 times free cash flow for such a business? I don't care why the market is going so crazy about it. It's at the end of the day, this is a retailing business. Right? Look at where are the other retailers trading for? Right? What's the Walmart trading for? At least 3% free cash flow yield, right?
So is there any stock out there, like when there was the big, the Monday dip or whatever, is there any stock that you kind of have your eye on, something that you're looking
yeah, so let's talk about what I did on
price?
Monday. Yeah, so I shopped on Monday, right? So let's talk about what I did on Monday. First is cryptos were all down, right? Across the board. So I did a diagonal collar spread on coin, because Ethereum was down 25%, but I didn't want to go ahead and buy ETHE. So I looked at, maybe I'll just use Coinbase as a proxy. So I sold August put spread on Coinbase and bought a September expiration call spread on Coinbase. So Coinbase, I took that exposure. Other one, similarly, I did was on Exxon Enterprises, because that was on my watch list. Damn, after earnings, it has jumped up 20%. And I think, was it Fred? He always talks about Exxon. And I know I've talked about Exxon earlier also, right? So that was one company which I had on my watch list. I had, what else I did? I picked up some Google on that day. I picked up some Arista Network on that day. Those four. What else I did? We go back and see any other. Mostly I did like those options. Yeah, I sold a short put at the money short put on Doximity, because my price point where I wanted to buy Doximity was 25. The stock had fallen down to 26. And again, like for no reason of its own. Yeah, it was around like 25 or something. No, Monday was here, right? It has fallen down to 25, 26. I sold a short put at 25, which of course, after the earnings, it went up like 38%. Right. So yeah, these are the things which I did. So you need to have your watch list and wait when this market presents this opportunity. On Exxon, I had sold, I think I did a similar stuff like what I've done for Coinbase, is sold a put spread and bought a call spread, but both was like September. And I closed it after Exxon had a nice jump, like $100 jump after earnings. So yeah, I've not yet built my thesis document on Exxon, but this is the company which is on my watch list. I still want them to improve their operating margin for their SaaS story to play out, but they got a good moat around their current business. So that's what things I did on Monday.
Great, thank you.
Cool. All right, any other question? Otherwise, we're done.
All right, catch you next time. Thanks.
All right, guys. Good to talk to you, and I'll see you next Saturday. Until then, have a good week. Again, don't panic. It's just a week. It's just a week. Doesn't matter.
It's just a week.
Yeah, in your decades of investing, how does it matter?
Stay calm.
Stay calm.
We need one of those little stay calm things.
All righty, guys.
Invest and stay calm.
Yeah, invest and stay calm. That's the mantra. All right. I'll talk to you next week. Bye-bye.